Hey guys, it's Kieran. In this video, I'm going to do a quick Bitcoin analysis and just give my outlook for the market. This week, we have so many news events. Today on Tuesday, we have the consumer confidence, but most importantly, where everyone is itching their backs for is the big FOMC meeting on Wednesday. And of course, this FOMC statement will greatly dictate the volatility, but also the market's direction. So overall, it has been an amazing month of trades, back to back, 11 good trades and winning trades as well. We've just been pretty much stuck in this consolidation range I've been talking about. We had this, of course, this potential continuation pattern initially. I thought it could be some kind of push up here, squeeze, compression, and potential continuation pattern. But what's interesting is that we seem to have a 4-hour range low around this 22,500 level and a 4-hour range high around the 23,300 level. Of course, we had wicks above it, but a lot of these were just false breaks. If you notice, we had a push above, push down, push up, push down, push up again. This was a false break, push down, push up, push down, push up. And so this was a complex false break. And push back down, back into the range again. It's interesting because we've just been stuck in this range, and a lot of people, especially myself, actually thought we would actually have a continuation. But this is the aim of the game. You win some, you lose some. And I do believe the FOMC meeting greatly might dictate the actual breakout of this range. I myself thought we were initially in this squeezing compression pattern, and it could be a potential wedge or some kind of continuation pattern, but then we had a breakout. But as soon as that, the volume was so poor, we pushed back down. And in situations like this, it's very important to actually consider the volume. I actually was in this trade, which I said in the Discord group. I had been an amazing month. I had 10 consecutive winning trades, and this 11th trade, it was interesting because I initially thought we would be in this initial channel because we had this first touch point, second touch point, third touch point, fourth touch point. Of course, I would ideally like more touch points, but we were undoubtedly in this 4-hour channel. And at this point around here, we were kind of having really good respecting of the lower end of the channel, but then we pushed back up. And so this trade was a very 1-to-7 risk-reward ratio trade. So I was aiming for the midpoint of the channel around 24,200, and of course potentially 25,200. I got my first take profit hit, so this is actually counts as a winning trade. And there's certain telltale signs as well that the actual initial dump was going to happen, and a lot of this had to be done quickly in quick analysis, and I was also out most of the day as well. So the big telltale sign in the situation was actually the volume. You have to constantly adapt your analysis in real time. So I initially entered that long position I mentioned earlier in that channel, and I hit my first take profit. But then when we pushed up, we had this volume here. So I've put a weighted volume moving average here. And generally speaking, I like to see a bottom heavy volume as opposed to a top heavy volume. And so this was actually quite nice, I thought, because we had a bottom heavy volume here. Of course, it wasn't that much more than the volume average, but still, it was still spike up, push down. But then when we reached the top of this range, the volume was really not that impressive. It was actually depreciating as well. And we had a period of consolidation. And once we broke out from the period of consolidation, we had this huge downward momentum candle. I think it's called a Mariposa candle. But anyway, the name is not so important. It's actually what the actual candle means. And we had this period of consolidation. We broke out. We had a huge spike in volume. And consolidation again, a huge spike in volume. And we had pushed down again. I didn't do anything here at this point. I got stopped out in just a slight profit when I actually moved my stop loss to break even around here, actually, just after I noticed this volume. It was very dire looking, to be honest. And so far, we're really waiting for the FOMC meeting. A pullback to 21 to 20k is actually somewhat healthy as well. It's not necessarily a bad thing. We are greatly due a pullback. Also, in this run-up, we've actually left so many imbalances as well. And this is looking at the CME chart. Sometimes CME gaps fill, sometimes they don't. Some people like them, some people don't. But just for sake of completion, I'm including it. And so we've had so many imbalances that have not been filled. And on top of that, there's certain areas that correspond to the CME gap. And in particular, this region here, I could definitely see a push down to kind of take out this liquidity between 22 to 21k. And the next region is around here between 20k to 21k. And so this is potential area of pullback. And such pullbacks are definitely welcome. And in some ways, this kind of pullback can be constructive. And so overall, my bias is bullish until this general structure is broken. But so far, I'm just waiting and potentially waiting for dips to long pullbacks or do nothing. I'm not shorting at all. I've not shorted now since December, and it has served me well. So I've also drawn a Fibonacci as well, because I'm just curious where we actually could end up. And so I've drawn this from the bottom on this daily chart to the top here, this initial spike. And I've added some fibs recently as well, because a lot of people in the Discord group were describing certain new fibs, and especially the 236. So I just thought I'll give this a go. I'm going to push up, and potential bounce regions could be here, 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 or potentially here as well. Something interesting though is the CME chart, and I've put on some moving averages, in particular simple moving averages. And as expected, we did kind of expect some kind of reaction around this 23,200 region. Of course, I could see a potential pullback to this 90 to 21 region, but it doesn't mean it has to happen. And so I welcome it, and I will be sitting in the sidelines. It's that old analogy I keep mentioning. When you're not sure what to do, and if you're not more than 60% confident in a trade, it's an analogy of it's better to be a pilot on the ground wishing you were flying than a pilot in the sky who's actually driving the plane and just driving it badly and wishing he was back on the ground. And so sometimes you just have to wait and let the market show its hand. In a month like this, I've traded a lot, but that's because I've seen really high probability setups based on my experience. But other months, I might do less. And so it's just about waiting sometimes as well. But I've thrown on some moving averages, in particular the 50, the 200, and the 100, and it will be an interesting if we actually had a crossover of this between this moving average and this moving average as well. I'm not saying it's going to happen, but if we get a pullback in some sense, especially as we've gone so above these moving averages, it would be nice to get some kind of retracement to one of those at least, and potentially a push up afterwards. So we'll just have to wait and see. Currently, overall, just looking at the sort of volume profile, it's not looking great, to be honest. We had this push up, we reclaimed that value area high, push back down, push gain once again, and we reclaimed that value area high. But the volume was looking very dire, as mentioned before. And now we've pushed back down to the value area low. And so this is central point, this point of control with the area with the high volume has really been flirted with, but we've pushed back down. And it could be a potential SR flip of the volume going down, and potentially we might go as high as this value area high and potentially push back down to potentially breach these lows. But until we actually get a high time frame closure above the range low, don't get too excited, because we could stay range bound more than you can remain solvent. So that's something to consider. But one of the, of course, the concerning things is that we haven't made a huge amount of structure in this run up. We have this huge imbalance, and this might definitely get filled. But so far, the big catalyst, I suspect, is the FOMC meeting. Also, something that is interesting as well is I've put the MDX3 algo, and if you are interested in it, there's a referral in the description below. But if you put it on, this actually does somewhat overlap with the theory that the CME gap could potentially get filled. And take it for what it's worth, but this order block, which is mapped up perfectly for you, it does somewhat happen between the 20 to 21 region, and I know a lot of people are looking at it, so it is important to be aware of it, but don't see it as gospel. Just adapt your analysis, especially in such a market that's so quickly changing, to really consider this. I'm also going to throw in this heat map as well, which is quite interesting as well. We seem to have had somewhat of a liquidity run up here. There is some liquidity left in this 25k region, and potentially if we push back down, potentially take out this liquidity between the 23 to 22.5 region, that would be interesting as well. And of course, there's 15 billion worth of liquidations in this 22k region. This information is useful in the sense that you get to see where the liquidity is being targeted, but you have to take everything with a pinch of salt. Yes, we know that this 25k region, 24k region is very interesting, and there has been some liquidity tapped here. If you push back down and are flirting this 23k region, and of course, if you push back down, you could argue that this liquidity region here would be the path of less resistance at this point. And so far, the 4 and the 1 are looking quite dire. Seems to be some key rejections of some key EMAs as well. But the thing about these maps is that it doesn't have to go the exact route that you anticipate. The market now has a narrative that we have to go through those liquidations here, but it doesn't mean it has to happen today or tomorrow. There could definitely be a situation where we pump after the FOMC, after just dumping to really kill the moon boys, and push up here and then push back down here afterwards. And so just be aware of this analysis, but don't assume that it has to dump there now itself. So far, we still are range bound, and so we were really need to see a high time frame closure, I believe, around these extreme lows, and then potentially a move down to take out this imbalances of fair value gaps. So just be open-minded and just adapt to the market, and don't get too attached to your echo chamber, especially in such a quickly evolving market. Something very interesting as well is during Sunday in particular, I called for people to go long in the Discord group, and a lot of people caught this long as well, and we ended up in good profit. One of the reasons in particular was I noticed in particular a shift towards a huge amount of retail starting shorting behaviors again, and I thought we could see like a fourth episode of this movie again of retails going extremely short. And in particular, open interest was rapidly increasing. We had this huge shorting pressure here, and of course there was a huge divergence as well in between the retail less experienced Binance traders and in particular the top traders as well. There's a huge divergence. But when we push back up here, of course the volume was just pretty much diverging as well and not much follow through. And I generally, as mentioned before, like to see a bottom heavy volume. And of course we had this consolidation breakout and huge spike in volume. And so at this point I moved all my stops to break even. And so now it's looking pretty dire as well. Of course the selling pressure slightly decreased now, and the volume is dwindling a bit, where we can just get another spike again if we break out. So that's something to consider. So far now, the actual retail shorts do seem to have decreased. A lot of them might have now started logging again, and this might in some way cause further downside. Again, not 100%, but it's just something to consider as well. Looking at the margin pressure levels, I always talk about this because it's so important to me, and it's actually worked out really well, almost to the T as well sometimes. And so this is looking at the habits of degen retail traders. Very often, retail traders use high amounts of leverage, and based on that, it can sometimes dictate certain levels, and sometimes those levels can be self-fulfilling prophecies. So I mentioned before in the previous videos that 20.6k region, 20.1k is the point in which you can long Bitcoin on 4x leverage and hide your liquidation point above the recent local low. And we had a huge amount of actual fighting and a lot of demand and supply action around here. Then we push back up, and I mentioned last video that 23.2k is a point in which you can long Bitcoin on 3x leverage and hide a liquidation point above the recent local low. And once again, we had a lot of fighting here. And so I've actually back tested this across the last 5 years. It has been actually quite interesting working out. Again, everything has to be used with confidence as well. But again, this is what I mentioned. We had so many attempts, and again, it's so much better to just trade with the trend and win like 60 to 80% of the trades and get stopped out in potential loss or potential break even in the last trade. Because if you were the kind of person that was shorting every single way, you would have lost like potentially 7 trades, and you're aiming for this final trade, this final big short for a potential move back down, but in the end it might only end up going here. So ask yourself, sometimes it's better to just sit out. And so this is something really to consider as well. The actual 2x margin pressure level, so the point in which retail can long Bitcoin on 2x leverage and hide the liquidation point above the recent local low, is around 30k. And so this potential move I cannot rule out as well. Imagine if we did actually go to 30 to 40k, that would be the point in which a few, and actually a lot of retail might FOMO in, thinking, oh guys, that's it, we've bought the bottom. And potentially it would be devastating if we then flush back down to potentially around the major low, around 18k, 15k, or even potentially new lows. So that would be an interesting scenario, and I will be watching particularly the 28k, 30k region. But a pushback down in particular to this margin pressure level around 21, 20k, it does seem possible, and I'm not ruling out, and it does not actually change the daily structure greatly as well. So I do welcome that, and I'll just see what happens. So looking at the wider market now, I'm starting off with the Dixie. And again, the Dixie is correlated to a basket of fiat currencies. The Dixie is not just the US dollar. And of course, we've been having this downtrend. And of course, what goes down does go up as well. So that's something to consider. We're not going to go down forever. I mean, whilst we could potentially go further down to potentially breach this low, it's playing with fire at this point. And I'm going to throw on the MDX algo indicator as well, that's showing the demand and supply. And if we do have a push up here, potentially to 104 to 106 level as well, that could potentially have a knock-on effect, inverse effect on the risk-on asset. So that is something to consider. And I keep talking about this. A situation that I could see play out is potentially a pushback down here, take out these lows, but then a false break, push back up. Or we could potentially have a falling wedge scenario, which we fall out and have a technical breakout, potentially to 104, 105. And so I'm really curious to see if the FOMC meeting actually feel this. And I'm wondering if that will actually cause mass panic in the markets. So now looking at the S&P 500 index, we've been pretty much having this downward sloping resistance line that everyone is looking at. And of course, you have to always be careful when everybody is looking at the same thing. There were certain clues actually that we would push up here, Because whilst we've been respecting this resistance line, we're having a push down here, push down here, push down, but this bottom was slightly more rounded. And it doesn't mean I'm going to go long here. That's not a high probability setup. It's very much playing with fire. But this bottom is a lot rounded. It failed to actually kind of meet this resistance line. Of course, again, resistance lines and trend lines are very subjective, but it is interesting this is rounded bottom. And to really break structure, I would really need to see potentially push up, take out the structure, push back down, consolidation, and a push up. Something else that was very interesting as well that I was looking at the other day is the S&P 500 index chart. And this is the chart from 2001. And I'm just thinking if we get a similar situation, potentially we could be around here, potentially tapping on resistance. And it'd be interesting if we get another breach of this low and a push back up and push back down, somewhat potentially in an Elliott wave pattern, although I'm not a huge fan of Elliott wave patterns. But then again, you do wonder what will be the next big catalyst. And it potentially, again, it also pay attention to the Federal Reserve as well. But this was just something that I just thought you guys might find interesting and just really compared to the current situation. Similar to the S&P 500 index, we've just been tapping away with this as well. And what's interesting is that paying attention to the S&P 500 index was so important these last couple of weeks. And if you'd paid attention, it was actually sometimes a lagging indicator potentially to Bitcoin's moves as well. But again, similar, if we do break out potentially after this FOMC news, we might hit this technical target around 35,500. But if not, we might have some kind of Elliott wave pattern, 5-point pattern. Again, I'm not a huge fan of those, but something could happen and we could potentially have a push back down, back into this range. Looking at the WIX chart, of course, WIX is known to have an inverse relationship with the S&P 500 index generally. And it will be interesting after this downtrend whether we actually push back up. And that would actually potentially mean a downward move for the S&P 500 index. So we'll just have to wait and see that as well. Looking at the oil chart, which is interesting as well, which I just look for completion. We've had this downward sloping trend line. And of course we had this higher low on the daily, but we do seem to be having a much needed pullback. And potentially we might go back down to a potential SR flip of this downward sloping purple line. So we'll just have to wait and see. And so now looking at the total crypto market cap, and I've drawn a Fibonacci as well, we were really struggling initially to reclaim and stay above that 1 trillion market cap region. But then finally we had a breath of relief, and we hit that 1.03 trillion region, crushed back down again to this 1 trillion region. And so there's been a lot of resistance around here, and naturally that will be greatly linked to the Bitcoin's movements as well. In question, potentially we could get a push back down to certain demand zones around here, around the 900 billion market cap, so we'll just have to wait and see. At the start of this month, I had greatly been trading Ethereum and had some really good successful trades, but I've pretty much just been sticking to Bitcoin this last 2-3 weeks, in the latter half of the month, particularly because the Bitcoin dominance has pretty much been pushing up here, pushing down, push up, and we took out structure, and I was quite concerned actually that we would have a push up higher as well. So eventually we're at this 618 retracement area, and so my concern is that we push up higher, and so my concern is especially whether the alts bleed further. And of course, just because the Bitcoin dominance goes up, it doesn't mean Bitcoin has to go up. Bitcoin can still bleed as well, but right now for me, greatly due to the unpredictability of this, I'd rather just trade Bitcoin. Guys, thanks a lot for watching this market update. If you found this video interesting, do like and comment on this video. I post things like market updates, but also teaching how to trade based on my experiences as trading, and I realize that trading is not easy and we all need a community of like-minded individuals. So thanks a lot for watching, guys, and I'll catch you in a bit.